Good evening, ladies and gentlemen. Hello, and welcome to Admiral Markets Market Pulse Weekly Update number 4 here for 27th of November 2024. I hope you're all well. I hope those of you joining us this evening, hope that you can hear me, hope that you can see the slides, see myself, okay, before we start for our session this evening. It's always important to make sure the technology is working in our favour rather than against us. Excellent. Thank you. Thank you. Thanks very much. I'm great to see people here joining us for the session. Really, this is Admiral Markets a weekly update, an opportunity for me to give you a little bit of update on what is available for you as a client of Admiral Markets, but also take a look at what's going on in the markets, okay, and what we see happening, and also just have a little bit of a look at a deeper look at one or two particular, whether it be themes or topics or actually particular instruments. As always, you're very welcome here, but we just always start with a quick risk disclaimer, so you can take a moment there just to make yourself aware of the risk disclaimer there. And invariably, just what you have to remember is that trading on margin does involve risk, and that ultimately you are responsible for your own trading decisions. What will we look to cover as always? Well, for the Market Pulse, there's always kind of three themes or aims we're trying to achieve for our agenda, namely how to understand and analyze global financial markets, and also looking at how investors and traders can turn their analysis to their advantage, and how you can trade and invest with Admiral Markets. So, of course, I appreciate to hear that, we always get a widespread, okay, of experience of people who join us for our sessions. I appreciate some people at one end of the spectrum, they are more focused on trading. Maybe that is short term. Maybe that is position trading, where positions are held for what might be a few hours, a few days, a few weeks, maybe even a few months. But then there's also, at the other end of the spectrum, there are longer term investors who might be holding positions for weeks, months, maybe even years, maybe even decades. So I appreciate that, we do get both ends of the spectrum. I also recognise that there are people who join us who are both traders and investors. And as I say, hopefully there's always something that, a small little nugget that we can share with you that regardless of your particular way of approaching markets, or regardless of your particular style or timelines, that there's always something that you can take away and utilize, okay, and build into your own particular trading or investing style. Those who don't know me, my name's Paul. I've traded and invested for many years. It's traded for hedge funds and traded for clients. Okay. In my own trading, I primarily look at FX indices and commodities, and I tend to, for longer term trading, tend to be a trend trader for swing and position trades, and then sort of a mean reversion and reversal trader for shorter term intraday trading. And then I tend to be basically intuitive in my investing, and I'll talk more about that as we go deeper into our sessions here. Of course, I appreciate some of you joining us for the first time and may not necessarily be fully aware of Admiral Markets, what they are, where they are, what they can offer you. So as always, we just offer a few slides just to help people get an understanding of Admiral Markets. Admiral Markets, they provide a brokerage that provides a wide range of financial instruments and various asset classes that you can engage with, as also a comprehensive education suite. These webinars being part of that, along with other excellent tools and solutions and educational pieces provided by some of my colleagues there. And as you said, you can see we've got a very good rating from Trustpilot. For those of you who are at the start of your journey, whether that be as a trader or whether that be as an investor, there are a huge array of details and educational information that you can tap into. So there are regular webinars with myself and other market experts. There's a market analysis. There is also access to the premium analytics portal as a client, and also access to the Admiral Markets research terminal. And there's also an academy platform that you can learn through. So there is an absolute smorgasbord there of educational material that you can access as an Admiral Markets client that can help you progress on your own journey. As I've said, I appreciate some people will just focus more on the trading route there that might happen there, that what can people will be looking at. But if you are particularly focused on trading, well then, what we look at is that there are over 4,000 available instruments as FX and CFDs on commodities, indices and stocks, providing a sophisticated trading environment. You also have access to MetaTrader 4 and MetaTrader 5 available for download and use. And you can also use the Admiral Markets mobiles app to be able to trade on the go if that's the way you particularly like to engage with markets. For those of you who are more focused on the investment route, once again, you can see there are over 4,000 available stocks and ETFs that you can access. You can also engage in fractional investing. You can also put in auto invest in the mobile app. And for the investment route, you have the MT5 platform, the web trader platform, and once again, you have access to the Admiral Markets mobile app. What we've provided this year in 2024 is that there is as I said, the research terminal that you now have access to, and we'll have a little look at that a little bit later, that is provided and available through both MT4 and MT5. There is also a VPS that you're available to access, and there is also an investing calculator to be able to be used as well. So, the Market Pulse weekly update. As the slide says, global financial developments can affect every trader's and investor's strategy. And so that financial planning requires having the right type of information as well as the right time when acting. I think it's probably fair to say that over the last month or two here, in terms of regardless of whether you're a trader or an investor, we have seen significant political change in the United States. And of course, we will be working through that. And that has brought in and induced volatility into markets. And so regardless of whether you're a long-term investor or a shorter-term trader, it is in your interest to be able to be sort of on top of the global financial markets in order to make better choices and decisions. So for our Market Pulse weekly update, it's a weekly webinar series. We kind of focus on how to navigate through the global markets and filter information that comes our way. So every week, we'll have a little look at some of the major themes that have been affecting markets this week. That means that we'll also do major analysis of the major global markets. As always, we'll be happy to have discussions about trading and investing topics that are important to you. And also, we'll chat about some of the technological solutions that are provided by Admiral Markets UK to help assist you in your trading and investing journey. But the aim being to help educate you and provide insight on markets and the way traders and investors can engage with them, and what Admiral Markets can provide you in way of helping support you on that journey. Okay, so I always want to have a little look at the week's themes, and what I talk about every week is that here we are when sort of the session's kind of Wednesday evening, so I'm always looking from between now and invariably this sort of next Wednesday. That's what we're looking for in terms of what are the kind of major news that's going to come out that will have an impact upon markets. It's not all of the news because, we'd be here for weeks if I was trying to cover that, but I'm just looking for what are the major themes, what are the things that I think you should be aware of, regardless of your trading and investing, approach, that you just need to be aware of, when the major news elements are coming out, because they will induce volatility into markets, and it's in your best interest to understand that. So, of course, we have a bit of an interesting week here. Talking from Wednesday evening onwards is that, of course, tomorrow is Thursday and will be Thanksgiving holiday in the United States. And so American markets are generally closed on Thursday, and then there's a half day on Friday, which most people will know is the kind of Black Friday shopping shopping sort of madness there, okay, that you undoubtedly have seen on TV and media, etc. So that has an impact on those markets. But this week, even this week, okay, we've had some quite a fair bit of data out this afternoon with regards to GDP, regards to personal consumer expenditure, and also the sort of the minutes of the last FOMC meeting. And of course, traders and investors are keen to understand that to see what impact that is likely to have in terms of Mr. Powell, head of the Federal Reserve, him and his team. What kind of decisions are they going to be looking at? What is the trajectory that they are sort of, working with or forecasting for interest rates in the US? And of course, that has a huge knock-on impact for the rest of global markets. So today and tomorrow and part of Friday, that will be dominated by the sort of aftermath of those meetings, but then also the sort of the lack of engagement from American traders and investors. Close to home on Friday morning, okay, we have the Governor of the Bank of England, Mr. Bailey. He will be speaking, and once again, people will be interested to see what he has to say and what his particular take is on not only the UK economy, but also on the reaction of the UK economy to the recent budget by Miss Reeves, the Chancellor of the Exchequer. And of course, that will also have a knock-on impact into the trajectory that Mr. Bailey may have in terms of interest rate cuts or rises for the Bank of England. So people will be listening to that and taking that on board, and they'll be looking, as I said, just for any particular hints about the sort of trajectory. Only where are we at the end of November? Only sort of 5 weeks or so ago, Mr. Bailey was talking about faster cuts and deeper cuts. But then since the budget, he's now been talking about a slower rate of cuts and also not as deep in terms of the actual cuts itself. So, of course, there's been a shift there, but then, of course, people will be saying, well, actually, will that continue if the UK economy continues and starts to sort of falter? And maybe later when we'll look at sterling, we'll look at FTSE, we'll be able to sort of get an idea of what traders and investors, how they are perceiving both the performance of the Chancellor of the Exchequer, but also the Governor of the Bank of England as well. Monday, okay, what we have, we're into a new month, okay, into December already, and what we'll be seeing on Monday afternoon afternoon for UK and European traders, is that we will see manufacturing PMIs for the United States. I often say this to completely new traders that I don't expect you to be able to completely analyze the economic data that's coming out. But it is important for you to know when that is, and you can find that out from an economic calendar. There's an economic calendar on the Admiral Markets website. There is also other ones available on the internet. So there's no excuse. But if you're at the start of your trading journey, PMI is a particularly good starting place for learning about fundamentals and the data releases. The reason being is that it is for a private trader. It is quite a simple, easy one to analyze. PMI data is okay, whether it be for manufacturing or whether, as we'll see on Wednesday, for services or a composite of them of the entire economy. The number that's released, really all sort of traders and investors are looking at it. Where is it in relation to 50? Okay, so it makes it quite simple and easy, almost like kind of binary in some respects in terms of how you analyze it. If the number is above 50, that part of the economy or the economy is growing. If it is below 50, that part of the economy or the overall economy, it is contracting. Okay, so it's very, very simple to understand. And of course, we're looking at not only the snapshot number, but actually how it has been against the previous months and previous years numbers to give us an indication of the strength or weakness within that particular economy, because of course that all feeds into, not only does it feed into central bankers' decisions, but it also feeds into overall sentiment, the overall confidence or lack of confidence that traders, investors may have in a particular country, particular sector, a particular part of the particular economy, a particular currency, etc. So it is a good starting place for new traders and investors to work with in terms of understanding economic fundamental data. Other data we've got coming out next Tuesday, okay, for Swiss franc, we've got their inflation numbers. There was recent comments by the vice chairman of the Swiss National Bank talking about how future interest rate cuts weren't guaranteed by the Swiss National Bank for the Swiss franc. Invariably, those numbers from CPI will be of real relevance to that. Tuesday afternoon, okay, for us here in the UK, we will have also the JOLTS job openings. All right, this is we're into, of course, the first week of the new month, so we get a varying degree of jobs numbers. Okay, so on the Tuesday we get the JOLTS jobs openings, and then on Wednesday we get the ADP non-farm employment change. And then next Friday, we will also get the big one, which is non-farm payroll. But invariably, JOLTS job openings, non-farm employment changes on Wednesday, they are effectively insight and data into the health of the US economy. So whilst maybe not as revered, okay, or as given as much purpose as by traders and investors as the non-farm payrolls on next Friday, they are still a very useful metric. It's still a very useful insight into the overall health of the economy, and can sometimes be a little bit of a heads up in terms of what we might see in the NFP payroll numbers on the Friday. We also have the Aussie GDP, which will be coming out Wednesday, and we also have, as I said, we have on the next Wednesday, we have the US services PMI. So Monday is the manufacturing, Wednesday is the services, all right. And so people, as I said, take a huge interest in, how are those parts of the American economy, okay? Are they growing, okay, or are they contracting? And invariably people have an interest in terms of, regardless of their background, regardless of whether it's manufacturing or the services. So there is, over the next week, even though we are losing a day and a half because of the American holiday, there's still a fair bit of data coming out. There's still a great deal for us to take on board and to look at. And as I say, traders and investors will be keenly watching all of that data, but particularly the US data, as we sort of start to go through a transition towards the Trump inauguration in what will be, sort of 2 months' time there, okay, sort of into sort of end of January. So it is going to be an interesting time, and we are already seeing, elements of Mr. Trump's style in terms of his communication style having an impact on markets, and we will look at that in a moment when I just show you an example of that. How that is reflected, how that has impacted markets just this week alone. Because I think, whilst that event has gone, I think it is a fantastic learning point for those of you who are new at the start of your journey, and also perhaps weren't trading and investing during the last Trump presidency, to have an understanding of actually how it works and what we can see happening. So we're gonna look at that in a particular moment. But before we do, as always, because we're new into a webinar series, I always like to still set expectations, because I think it just helps new traders, new investors just understand, okay, the sort of kind of expectations I have, the standards that I sort of kind of try and impress upon people. As it says, before engaging in any trading investing, we always have some rules and expectations. These are very sort of high level ones, okay? Those of you who would know me or have been to many of our previous webinars for Admiral Markets will know that we'll talk very much about how risk management is absolutely key, okay? Regardless of whether you're a short-term trader or a long-term investor, you should really always be understanding your risk management. You absolutely honour that. As we've just discussed, know what news is coming out for the week ahead. You can find that economic calendar on the Admiral Markets website. Check your analysis before making decisions on what does that mean. Well, that tends to mean for the kind of the longer term traders and the longer term, sort of investors. I myself, I do the majority of my analysis at the weekend when markets are closed. So it means I'm not distracted, okay, by any sort of, movement or volatility in markets. It means that I'm not likely to get sort of bounced into making any kind of knee-jerk or impulsive decisions. I can sit down and do my own analysis, and then effectively create a plan out of that, so that I'm in a position as I go into my week to work out and understand exactly what I want to look at. Always ensure that you have a good internet connection, okay? And as I even say to people, all right, just have to recognise what's going on in the world, okay? This is a Wednesday evening on a Champions League football night. Invariably, there'll be lots of people trying to watch those football matches. That can have an impact on your internet connection, depending upon what part of the world and where you actually find yourself. what is the sort of things you want to be aware of and recognize, especially if you're shorter term trading. Okay, the last thing you want as you're short term trading is to actually lose connectivity. That can make for a rather tense and fraught period as a trader. Always make sure you're rested and prepared. Okay, you owe it to yourself to be in the best place possible to be able to trade and invest and make good decisions. And just remember that for longer term trading and investing, we are looking to be long only buyers through the Admiral Markets MT5 Invest platform, which we will look at in a moment. One other element of is invariably is just us looking at the setting expectations, just so that if you're new to joining us, that you will find that my charts, for the most part, are quite simple. Okay, I'm a great believer that less is more. There are a absolute smorgasbord, okay, of additional indicators and tools that you can access and place onto your charts. And one of the great things about MetaTrader platform, whether it be 4 or 5, is that there is an absolute, there's a world out there of amazing add-ons and plugins that you can take. But generally what you might find, and sometimes people are surprised by, is that actually I believe it very much is the less is more. And so you'll find my charts quite simple. I'll have blue or green bullish candles, red bearish candles. I'll have a blue 20-period SMA, a red 50-period SMA, a green 200-period SMA, and then you can also see fractals there, okay, that help me just identify particular levels and support the direction or the change of direction. So I'm a true believer in that less is more. Keep it nice and simple, because the more you add to your charts, the easier it is to become either overwhelmed or to become intimidated or to actually just suffer analysis paralysis, because there's actually so much data coming off the chart to you that you actually find it hard to make a decision. I think that less is more. Keep it nice and simple so that I'm in a position to make good quality choices when I'm looking to make either a trade or whether I'm looking to invest for the longer term. And for those of you in particular, Admiral Markets, okay, looking at what they offer. Well, for if you have a particular UK focus, you have access to all of the UK FTSE stocks. You also have access to UK ETFs, but I mention it every week. Just remember, just because it is based in the UK, that might not necessarily be a UK ETF. It might be based in the UK, but it might be an ETF that focuses on the American S&P 500 market, or it might focus on Asian and emerging markets, okay? So just make sure you know exactly what the ETF is you're looking at. And you also, as I say, you have access to the Admiral Markets research terminal, but you just have to remember that we are longer only, right, on the Admiral Markets MT5 Invest platform. So just remember that. And I always suggest that if you are focused on UK stocks, that the actual London Stock Exchange website itself is actually really quite useful. It's got a lot of fantastic data on there if you want to go in and dig a little bit deeper. Even just something as simple as a heat map to understand, okay, where the winners and losers are in the sort of London Stock Exchange for that day or particular week. And as I said, if you are a Admiral Markets investor, okay, and that's what you're looking for, right, then Admiral Markets, you can open an Invest MT5 account, okay, through the platform. Quite simply, log onto the dashboard, either use the web trading platform or download the MetaTrader 5 platform, and then you can search for UK shares and click the symbol to open a price chart, and then invariably, just create your order and send your order to the market based upon what you're looking to achieve. So we'll switch across to the markets now, okay? But just a reminder, right? That the whole idea is the Market Pulse weekly update is Wednesday, 7 o'clock London time, where we'll take a little look at major themes affecting the markets. Basically, some market analysis of the major global markets from both a trader and an investor style. We can always have open and have questions about trading and investing, and as I said, look at what the technological solutions that are provided by Admiral Markets UK. So let's just switch across to the chart, shall we? So if you just bear with me a moment, we'll switch across to the chart. So just bear with me one moment there, okay? And let's bring up some charts. Excellent. Okay. So, I always like to start with look at the sort of overall global picture for global markets here. Okay, so I have one of my profiles here. Let's just bring up the old drawing tool to help us. Okay, so this is this is a profile. So what I have here is I have an Admiral Markets MT4 for platform for trading, and then I also have an Admiral Markets MT5 Invest platform for longer term investing, focusing primarily on UK stocks. So I have the two platforms that I can run, and in many ways, I find that helpful for me. So when I have my Admiral Markets MT4 trading platform open, I'm in my trader mindset where I have specific sets of rules. But then equally, when I'm looking to do my investing, I have a different platform, okay, MT5 Invest platform, which basically sets me into a different set of rules to follow. I find that helpful for me. Okay, it's almost like there is trader pool and there is investor pool, and I've found that over the years that I operate better when I keep the sort of the two of them separate. And so actually having the two platforms there is one of the things that particularly helps me with that. So while we just to talk through here, I'll just open I was just updating my MT5 platform. We'll have that set up and grow so we can have a little look at it in a particular moment. But whilst that said, let's have a little look at some of these indices here. We'll be able to just take a look at what we've got going on here. So let's restart. As you can see, probably, I hope, what we have here is what we've got here. We've got the Dow, S&P 500, the Nasdaq. Okay, this is the ASX, which is the Australian index. Oops, he says. Let's just as I said, that's just opening its way up. Let's just close that down whilst it's opening itself up and working away. Let's just bring that back up there. It's just taking its time to open up the MT5 platform there. There we go. So the MT5 platform is open, but here we go. That's what we want to be looking at. We want to be looking at the MT4 platform. There we go. Bang. All right, so invariably we have, as I said, I've got the Dow, I've got S&P 500, Nasdaq, ASX here, got the DAX, the FTSE, the Nikkei, and the Hang Seng, the Hong Kong. So just on one page, I have, as you can see there, I have a kind of a spread of the global indexes, which just allows me to take a snapshot of, whether we are bullish, whether we're bearish, whether we are in a risk on, mentality, or whether we're in a risk off mentality. And I think that for new traders and investors, being able to understand that is a really good starting point. And in one of our future sessions, I'll just take a few moments to look at that. But if you want to learn more about that, then please make yourself aware and available for the Admiral Markets YouTube channel. You can go on there, you can subscribe, and you will find previous webinars that myself and other members of the Admiral Markets team have provided that give you some really good insight into understanding what you'll hear me talk about as RoRo, understanding whether we are in a risk on or risk off environment. Okay, so let's have a little start with some of the. We'll start with some of the kind of the major American sessions, and so what we can see here is I'm just going to put the American ones here onto the weekly charts just to begin with, and hopefully, as I said, what we can see is that we continue. Okay, this is the Dow on the weekly chart. We continue to be in a strong uptrend. Okay, for the Dow, as we do for the S&P 500. And the Nasdaq, it is bullish. It has not, if you look at that, it has not followed, through to the highs in the same way the Dow and the S&P has, but it is still of a bullish trend, still of a bullish trend. And what we can also see is that that's following through in terms of things like the ASX, the Australian index. That has been kind of intriguing to see. So we can see across those American and Australian indexes, we remain in a strong bullish, trend. So until that changes, until that there is a discernible change in that, then why would I look to fight that? Okay, I try to get across to both traders and investors. At the beginning of your career, what you're really looking to do is to find a good trend and then just find a way to ride it, to take a piece of that particular trend. Sometimes new traders in particular like to think that they have to capture the exact turning points, okay, or the exact start of a trend and have to capture every piece of the trend. Whereas actually I'm here to tell you that is A, that doesn't need to happen. B, trying to make that happen for yourself is just a way to put additional stress and pressure on your shoulders. What we want to do is we want to identify what if at all there is a major dominant trend, like there is the bullish trend there, okay, especially in those American and Australian indexes. And then we're looking to find, well, how can I actually take a piece of that? How can I actually join that for a portion of that trend? Now, depending upon your timeline as a trader, maybe a very short-term trader, or maybe a very long-term investor. Okay, in terms of how long you intend to ride that particular trend, that can differ, and that a lot of that will depend upon your own rules. It'll also depend a lot upon your own risk, okay, your risk parameters, okay, and your own appetite or lack of it for risk, okay, and that is something that is really desperately important to understand, okay, as a trader. It's not only about managing risk, but also about understanding your attitude towards risk. Some people are very accepting of risk. Some people are very, risk avoidance. It's not necessarily a case of, trying to be something you're not. What I tell people is that it's important to know who you are, okay? You don't particularly, not only do you not want to fight the market, you don't want to fight yourself either. And understanding yourself and trading and investing in line with your own risk parameters is it's a crucial element to sort of long-term success, regardless of whether you be a trader or an investor. It's about understanding your attitude to risk. So those American indexes and the Australian one, they're in a strong bullish trend. So you should be, as a longer term trader and a longer term investor, why would you be looking to fight that? All right. Why would you be looking to fight that? There's nothing really to be gained to do that as your medium to longer term engagement with markets. However, if we look a little bit closer to home, okay, and what I'm talking about here is, sort of UK and European indexes, and it might be said some of the other Pacific-based indexes, things might be a little bit different. So, if I look at here at the Nikkei, okay, the Japanese Nikkei there, we can just basically, here we go. We can see this is the Nikkei, okay, the weekly chart. And what I see here really is this is probably an indication, and please excuse my drawings, as I say every week, I'm a better trader and investor than I'm an artist, but I'm here just to basically give you an idea of the gist of what we are particularly looking at. And invariably what we're looking at is, I particularly would look at that as, we're effectively kind of coiling up there on the Nikkei. And that is also probably a reflection of a bigger picture to do with the Japanese political situation and also the, let's say, the kind of new trajectory of the Bank of Japan in terms of looking at when and if and at what pace, there might well be rate hikes in Japan, because that will have an impact on the cost of money and the cost of debt, and that has a knock-on impact on companies themselves. Personally, my view would be looking at this here. Okay, some people might say that this is actually quite a large head and shoulders pattern, all right, that has been building here. Under classical technical analysis, you want your right shoulder to be lower than your left shoulder as an indication of the fact that the market is particularly ready to roll over. Now, of course, with a head and shoulders, you would normally have a very clear neckline, okay? I'd probably be drawing there as my neckline. As I said, excuse my artistry, but I'm hoping you can at least get an understanding of what I'm looking at. And, what we're seeing here this week, excuse me, is that so far, as I said, we've still got a couple of trading days to go. We have been sat here on the 50-period moving average, and the last couple of times we've come down here, it has bounced off there, but I'm starting to see here that we are getting lower highs. Okay, we're getting lower highs. We're coiling up, and so I'm kind of particularly keen to see, is this a case of we see the Nikkei starting to roll over, and in which case we could start to move much lower. Okay, much lower to these kind of levels around about 35,000. That's one thing that I would be just particularly looking at. Why would that move lower? Well, that could move lower if there was a rise in the Japanese yen. Okay, Japan is a hugely, export-driven economy, and so invariably any increase in strength in the Japanese yen has a knock-on impact. Okay, on the Nikkei, because of course it makes those companies' exports more expensive when the yen gets more expensive. And so, is this an indication that perhaps markets, okay, and the economy is getting ready for a rise in the strength of the Japanese yen? All right, and that's what I'll be kind of watching that there in terms of the overall global theme. What we'll have a little look at, okay, as I said, getting back a little bit close to home. So we have this is the DAX, okay. So this is the German index, okay, the major index for Europe, and you don't need to have been you don't need to have a sort of to be plugged in and connected to every bit of economic data out of Europe to realise that at the moment Germany is struggling both in terms of its economy, but also in terms of its political political makeup there at the moment. Okay, we are seeing kind of an unravelling there in Germany, and also we're seeing particular issues with the German economy. And in particular, okay, some of their major exporting companies, so in particular their automobile sector, they're having particular difficulties and struggles at the moment. Despite all of that political and economic shenanigans, difficulty, despite all of that, we have seen the DAX this year, for the most part, be in a fantastic bullish trend. Not a particularly easy one. We've had some very deep pullbacks there, okay, and we've had some, real kind of real sort of scrappy price action. But really, even looking through the summer where we kind of came back here, this is I would be looking at. Not only is that a bullish pin bar rejecting the 50-period moving average, it then becomes a morning star, which is another bullish pattern formation, and we continue to work our way higher. Right, so we peaked out, okay, back at the sort of start of end of September, start of October, and since then we have been in a little bit of a kind of a retrace, a little bit of a pullback. Getting these particular candles here, there's an awful lot of wicks to both sides. Okay, we've had a couple of weeks of indecision, markets trying to work out which is the next direction. But what we saw last week, and this is, we saw last week was, this, I would look at that as a bullish pin mark. It's a bullish rejection candle. It also rejected that 20-period moving average, and what we can see here is that there's lots of experience of price using that 20-period moving average as dynamic support. So what we're looking for to see is, well, is there the kind of data going to be coming out regarding regarding A, Mr. Trump, but also B, Europe, that might give the DAX the opportunity to sort of, finish the year by pushing its way to its new highs, which would be, a fascinating and interesting proposition based upon the fact that the world in general, since the election victory of Mr. Trump, which was less than a month ago, all right, so maybe 3-4 weeks ago, what we have seen is invariably a kind of an overall theme of being long the US, short Europe. That was kind of a reflection there. We have certainly seen that play out in the euro against the dollar currency, which we will look at in a particular moment. But for the most part, despite all of this volatility, all of this uncertainty, the DAX has continued to hold up. All right, the DAX has continued to hold up, which I have found fascinating myself to see how that has particularly played out. Even when I go down to the daily chart, okay, here on the DAX, what I'm looking at is, once again, as I say, just excuse my sort of artistry. But at the moment, I would look at that as, we are working our way down in a particular channel, okay? And so, yes, that is, maybe we're looking as a little bit bearish, but what I'm also interested in is I'm still seeing support, okay? I'm still seeing all of this support here, okay? What I'm intrigued to say is that, if we respect this resistance line, okay, then invariably what I would be expecting us is to come back down here. But as I was saying earlier, if we see this resistance line broken and we close and hold above it, well, then it would not surprise me to see us move towards an assault on the previous all-time highs, which, as I said, were only 5-6 weeks ago. This was, back into October. Okay, so I see where we are at the moment as this is, excuse me, we're at a bit of what I would term an inflection point. We're at a point where markets are likely to make a decision. Either A, do we, attack the highs, or do we actually roll over there? And that's what I'll be looking at. That, as I said, I haven't drawn that trend line in as beautifully as I would normally, but I'm hoping it just give you an idea of the gist of what I'm looking at and what we want to sort of take on board in terms of keeping what we should be keeping an eye on, regardless of whether you're a long-term investor or even just a position trader, just to give us an idea of what's going on there. If we look even closer to home, we have to have a little look at the FTSE, okay, the UK FTSE here. Now, excuse me. Those of you who've joined us for our sessions, okay, over the last month, we talked about how we can see this is the weekly chart of the UK 100 FTSE, and you can see for most part of the year, we've just really kind of gone sideways in a range, you might say, between about 8,100 and 8,400, okay, 300 pip range. Yes, we have busted out of it at times, but we seem to come back into it. I said in some of our earlier sessions, okay, back in August and September, that I didn't think much would happen until after the budget, and we saw it here. Once the budget happened, we fell away here, back down to the 50-period moving average, and also to the big round number of 8,000, okay? And we looked at this a couple of weeks ago, and once again, I've just been talking about an inflection point for the DAX. I felt that this was an inflection point for the FTSE as well, namely if it broke the kind of the 50-period moving average and the 8,000 number, well, then it would not surprise me if we had gone back down to an area around about 7,800 there, okay, where we had quite a bit of support, resistance and support there. Or, as we can see, what has happened, is that we've actually bounced really nicely off the 50-period moving average and have pushed our way up there. The question we have to look at is, well, what was underpinning that kind of bounce there from the 50-period moving average? Undoubtedly, there will have been some technical traders, technical investors looking as a way to purchase, but also fundamentally, is there anything that has really changed, okay, in the UK economy that would effectively favour UK companies and UK businesses? My personal viewpoint would be that there hasn't. If anything, the budget does not help in any way, shape, or form. But then equally, there will be other people who would have different economic and political opinions to me, and that's absolutely fantastic. That is what makes a market. Okay, people with differing views playing that out in the market themselves. Personally, I think we've probably just had a little bit of a sort of a relief bounce there. It's probably been dragged there by stability in the US, which we'll talk about a bit more in a particular moment. But if I go down to the daily chart here, let's have we can have a little look there in terms of. There we go. So what I was intrigued was, this is the daily chart, okay. As I said, you can see we were in a nice move down, okay, and we came down to the big round number of 8,000. Big round number of 8,000, and then we rejected it. We printed some, really nice rejection candles, and we've worked our way up. And then, really, at the end of last week, we had a little bit of a pump there, okay. Part of that would have been due to some of the issues in the US, okay, and what we're seeing is Mr. Trump's political picks have been not always received very well, shall we say, by the political establishment in the US. That, of course, creates volatility and uncertainty, and so that we saw basically shifts in those markets across to other instruments, to other asset classes, to other markets, and I think we've seen that there. For me, I'm looking at this here, and once again, the 50-period moving average, where really I would look at them. We spent most of those kind of sort of 2 months just pivoting around that red 50-period moving average. Now I'm looking at, here it acted as resistance. Is it now going to act as support? If it acts as support, that would be bullish. And as I said, I'd be looking for us to move up towards that kind of 8,400 level, right? As the sort of kind of, let's say, the swinging longer term trader in me. That's what I'd be looking for. Because the reality is, if we just go back up to that weekly chart, comparing the UK market, comparing it to what we just looked at there with US markets, Australian markets, into German DAX, the FTSE really has been a laggard, really has kind of, trailed behind considerably. And once again, business people are looking at, well, is has the budget helped with that, or is the budget going to hinder with that? The initial response has been that most of the budget will hinder that. That's what we're seeing, and I think that people are waiting to see, does the FTSE, is there enough energy and enthusiasm for it to break through those levels and get up to that highs? I remain to be convinced personally, but you have to trade what you see. And what we saw here is price came down to the 50 and it has bounced off it. So now you're looking at it, it is above the 20, it is above the 50, okay, in the weekly chart. As I said, now I'm looking at, can it get back up to that sort of 8,400 level? That would be bullish, and getting above it, well, then that means that we would be pushing to those highs there, okay, those highs of 2024 and all-time highs. So the FTSE is in an interesting place, all right? The FTSE is an interesting place, and we will see over the next, I would suggest, next 2 to 3 weeks, whether actually it has what it takes to basically to get up to those levels. Because if it doesn't, well, then I think we roll over and fall back towards that 8,000 level. We can see it's acted as support before, okay, and there is resistance. So, that would be my level of that. There's 8,000 is underpinning it, and now I want to see, can it push to, above 8,500. That would be a very interesting, make for an interesting end to the year and an interesting start to 2024. So there you go. We just had a little look at most of the kind of major global indexes, just to have a particular look at what is occurring there. Let's have a little look at. I want to have a little look at, of course, I always want to have a look at what the dollar is doing. Okay, how that is particularly working out. I'm always intrigued to take a look at that, and then we might have a quick look at one or two other elements that reflect some of the political changes here in the. Not only in the UK, but actually in terms of the political changes in the US, how they are impacting global markets, because I think it's a really useful learning example for traders who are at the start of their particular journey. Excuse me. So what we have here, this is a profile here I have for the US dollar. Okay, and what I have here is the dollar index, which we'll look at in a moment. Then I have Aussie dollar, Kiwi dollar, Euro dollar, dollar Canadian, pound against dollar, dollar yen, dollar Swiss franc. So very quickly, I get an idea about the US dollar index and also the dollar against the majors. And I very often say, more primarily to sort of new traders, that actually you can do very well just trading the dollar against the majors, just in terms of you can do well in terms of it being a pathway, okay, a pathway that offers you the opportunity to understand markets and to be able to engage with them. Because what we see is that the dollar is it is you hear me say it, refer to it as the big daddy, okay, and it is, all right, and it really is. And so as a trader and investor, it is important for you to have a grasp on what the dollar's doing. Is the dollar strong? Is the dollar weak? Is the dollar volatile? Is the dollar quiet? Because that can also have a knock-on impact onto not only the majors, but also into things like indices. It will also, you'll see the reflection of that between that and bonds, and commodities as well. So understanding the dollar is a good starting point. It's a good starting point in your pathway. If I look at here, this is the dollar index, right? If you're new, the dollar index is just the dollar against a basket of particular currencies. About 57% of it is made up of, the basket is made up by the euro, which means the dollar index makes a really very good very good sort of intermarket relationship between understanding the dollar index and euro dollar. So what I mean by that is that you can see here that it's an inverse relationship, okay, between euro dollar and dollar index. When I can see like this, how we've seen absolute dollar strength there for the last couple of months, you can see that there, that's pretty clear. That shouldn't be a surprise to see the inverse of that when we look at the euro dollar chart in a moment. But we can see big round number there, 100. As we were getting down towards that area, we found support off the 200 period moving average on that 100 area, and you can see that there has been a real strong, bump there in the dollar. But interestingly, if you look at this week, the wind has come out of the sails a little bit, and I'm just going to sort of share with you and show you a little bit of an idea about that. You can actually see here, this was Friday, and we started to, even though we had all this daily chart and strength, we kind of started to ebb into the afternoon of that American session. Why was that? A lot of that was to do, there's a few reasons, but one of those was particularly to look at the Mr. Trump's choices, okay, with regards to, in particular, sort of Treasury Secretary, and how the markets were perhaps maybe just showing their kind of a little bit of their sort of unease with some of the particular choices. What we saw was, if I just going to go down into a little bit onto the sort of lower time frames here, just wanted to have a little bit of a look and understanding. Here we go. This is the 4-hour chart, and I just picture this because this was Friday, and then what happened is we closed here, but then invariably we had a gap open between the Friday night and the Sunday night. And part of that, as I said, was because Mr. Trump released his Treasury pick, okay, and that had an impact on the market in terms of taking some of the strength out of the dollar, which we will see on others. But you can see since then, what has happened is, it took us a day or so to come up and fill that gap. Nature abhors a vacuum, ladies and gentlemen. So when there is a gap, very often they will fill within a 24 to 48 hour period, certainly within most within a 6-month period. And we can see here it took about two days, all right, about sort of 18 hours for it to fill. But what we can see is that once it filled, then we basically rolled over, okay? And we can see that the dollar, whereas the 50 had been acting as support, that is now flipped. That's flipped now. Now, of course, what could be seen is an element of, as I said, we've got Thanksgiving holidays. We've got effectively a couple of days off, and some Americans will, take the Friday off as well, so they can have a long weekend. So there will be some people who have probably just taken some profits, trimmed their positions, running it into the long weekend away, especially with today's all the sort of the data that we've had for the US. So, perhaps on Monday of next week, maybe we get a little bit of a relief rally there. But, it's kind of just interesting to see, after all of that strength, that actually, this week we've just, it has been a bit of a dollar weakness, okay? A dollar weakness sort of on the very short term. So naturally then I'm keen to look at, well, how does that playing out against the other currencies? Remember what I was saying is that the dollar index, okay, is made up of about 57% of the euro, and so we want to have a little look at the kind of the euro dollar chart to understand how that is. Okay, so we'll just have a little look. Come on, let's just bring this up there. Over the kind of interesting, as I said, the interesting time as last week. Okay, you can tell when just looking at the charts themselves for the period here. I'm just waiting for that just to improve. Come on, let's see what's happening there. I think clearly everybody at home is switching over to watch the Champions League. That's what there is. That's kicking off. What we are seeing there, the euro dollar. Remember, dollar index has been supremely strong. Look at that in terms of the euro dollar. Okay, so as I said, the kind of bigger theme since the Trump election has basically been long US, short Europe, and that's why we're seeing that. We had this fantastic double top here with the second half as an evening start, and then basically we can see that we've just played our way down there, right? And that has been a reflection of that kind of weakness in Europe and weakness in the euro and strength in the dollar. But once again, remember what I was saying just about the dollar index. The last day or two this week, we've had a little bit of a turnaround, a little bit of a bump there, okay? But, certainly getting down to, what was, sub 103.50, all right, we've bounced off that. And if you look at that, here we go. It's done, it's the inverse correlation of what we saw in the dollar index. We had on Friday, after what was pretty terrible PMI numbers out of Europe, you can see we sold off strongly, but then we bounced and we gapped up. And we came down, okay, and we just kind of almost just touched that, filled that gap, and then we bounced our way up from there. Okay, now, as I said, I think this kind of strength in euro dollar might more to be do with dollar weakness than euro strength. Personally, that's my view. But once again, you have to trade what you see. We've gotten above the sort of, we've flipped the 4-hour 50 period moving average. Here it's resistance. Now it's turning into support. So you'd be looking for the next day or two. Would we see a little bit of a continuation in that strength there? So, as I said, the dollar is still the strongest currency, but this week there has been a little bit of a nab. There's been whether it's been trimming positions in front of Thanksgiving, taking a little bit of profit. That is what we have. That's what we've particularly seen. And so, what I'm intrigued to see is, will that carry on next week? Remember, next week we're into a new month. We're also into the final month of the year. We're also into an awful lot of American data that starts to show up there. So, whilst that's doing that, why don't we use it just for the last few moments just to have a little look at some of the elements of the UK in particular. Okay, what I wanted to do is to have a look at. We've just talked about the impact, okay, of Mr. Trump and what he's been having, okay, and what he's bringing to the markets in terms of his style. Of course, one of the elements close to that, okay, in terms of looking at it from a purely financial markets interest, is the Admiral Markets MT5 platform. This is British Aerospace, okay, British Aerospace, BAE. And we've looked at this in the past because I talked about in terms of being a longer term, either a position trader long term or a long term investor. Remember what I was saying is that we just want to find nice stocks, okay, that are in a nice uptrend and look to catch ourselves a piece of that. And I'm intrigued and I'm watching here because, well, I'm hoping you can see that, we've talked about here how this is the weekly chart over the last couple of years, okay, and how price has basically every time it's come back to either the 20 or the 50, it has bounced slightly. But actually, the last week or two, or last month or two, we've been a little bit, there's a little bit of volatility. We're still seeing the 50 hold, okay? We're still seeing the 50 hold, but I'm intrigued. And why am I intrigued? Well, because one of the elements of this is going to be Mr. Trump, okay? In two elements. One, what Mr. Trump does about the ongoing war in Ukraine, okay? And two, what does Mr. Trump do about his funding for NATO? So, of course, what we are starting to see is that, the initial rhetoric is that Mr. Trump, does not want the war in Ukraine to continue, and he's not happy it's funding NATO, which might well mean, okay, that we have to see European defence stocks, okay, step in to basically bolster European defence. So that's what we're looking at, and British Aerospace, as I said, is an interesting chart. I look at that having gone sort of sideways for the last couple of months. It's consolidating because, of course, is there a case that if there is the end of the war in Ukraine, then that means the share price in British Aerospace, along with other defence companies, is likely to roll over. But alternatively, if Mr. Trump basically just says that he is becoming perhaps not isolationist, but he is refusing to fund Europe in the way that he had or the US has in the past, could that mean that is an opportunity for British Aerospace to step in and grow? And I think that's why we're seeing such volatility there at the moment, and it's something that I would be keeping an eye on myself, okay, because we'll get an idea of if it is a case that we start to see European coalesce around their own defence needs, well, then that could be an opportunity for British Aerospace and other defence stocks. But as I said, I'm just watching that at the moment. Yes, it's been a fantastic trend. Yes, the 50 is still supporting it. I'm waiting to see, will that continue? Okay, will that continue itself? All right, that's what we're interested to keep an eye on. Whilst we're here, we can have a little look at one or two of the UK. So invariably, this is CHG. This is Chemring, which is another company that generates is a defence related. Okay, it's just that it is here, and we can see that Chemring they produce mostly it's kind of like defensive aids subsystems. All right, and we can see that the last year for the most part has been very good for them. But what we're seeing here is, I wonder if we're seeing another head and shoulders pattern. This could well be more of an indication of what we see for European defence stocks. Okay, is that they start to come off if we get to start to see the end of a war in Ukraine. Okay, and I don't have any particular insight there. It's just, of course, Mr. Trump has made it very clear that he basically doesn't want to engage in such let's say such international sort of shenanigans, etc. So we're going to be fascinating to watch to see how this particularly plays out over the next couple of months in the run up, in some of the volatility in the run up to his inauguration, and then also what he actually gets to do on sort of day one in the office, and what he's going to really come out with and what he's going to basically lay down. Because that's going to have an impact on US markets, it's going to have an impact on the dollar, and it will have a knock-on impact on UK and European stocks, European indices, and also European currencies as well. So we are set for a rather eventful and interesting couple of months ahead as we sort of come towards the end of the sort of end of 24 and the sort of into the new year of 2025. Okay there, ladies and gentlemen. So as you hear me all say, time flies when we're having fun, and invariably we've sort of run out of our time here today. But I can hope that is giving you just a little bit of insight, a little bit of help in terms of what Admiral Markets can provide to you, but also just a weekly update, okay? A weekly look at the big themes, look at the big markets, and also have a little look at how they may be having knock-on impacts closer to home in terms of whether it be UK stocks or whether it be, currencies, indices, commodities, all of which you can either trade or invest with Admiral Markets. As always, I wish you the very best of success in your trading and investing endeavours, and I look forward to speaking to you next Wednesday, and I hope you'll join us then. Until that time, have a fabulous week, and I'll speak to you soon. Many thanks.